Hey everyone, and welcome to FinTech. In this video, I'm going to be reviewing my now just under $145,000 stock portfolio and talk about how it's performed over the past year, what positions I'm invested in, as well as any changes that I've made in my stock portfolio within the past month. So let's jump right in by looking at my Charles Schwab brokerage account. So you can see here that I have just under $145,000 invested. Now this is split between both my Charles Schwab account as well as my Vanguard account. You can also see in this view right here that my account has increased in value by over $109,000 in just the past year, which is an increase of over 300% for 2020. Now, granted, some of that is from me adding additional money to the accounts, but the majority of that is just from stock appreciation. And to understand that a little bit better, we can look at this graph here of the chart over the past year. So you can see that my stocks were basically flat for the beginning of the year, going up and going down a little bit between January and March. But then, surprisingly enough, as soon as the pandemic hit, the stocks that I was investing in took off. Mostly because the stocks I was investing in included software as a service companies, which actually benefited from people needing to work from home and companies shifting a huge part of their applications and infrastructure to the cloud. Since March, my portfolio has been growing pretty consistently until it peaked around March of 2020. At that point, I was at just over $145,000, and this period was just before a lot of the companies in my portfolio reported their earnings. Expectations were really high for a lot of these companies, but when a lot of these companies reported fairly conservative guidance because they expected more people to stop working from home in the next coming months, the stock prices on those companies pulled back a little bit. Now, in my previous stock portfolio reviews, I talked about how this rotation away from these software as a service stocks seemed like just a temporary risk to my portfolio, so I wasn't going to sell any of these positions. Now it seems like that initial thought is turning out to be right now, because in December, my portfolio hit a new high of $157,000, and even though it's dropped a little bit since then, it's still almost at the same level that it was back in October just 2 months ago. So that kind of shows you the growth that my portfolio has experienced the last year. At $145,000, coming from a base of just over $35,000 back in January of 2020. But now let's look at the 1 month view of what my portfolio has done just in the month of December. So you can see that December was actually a pretty good month for my portfolio, starting at around $135,000 and ending at almost $145,000. A 1 month change of up around 7% and $9,208. That increase is despite the fact that on the last day of December, my portfolio declined almost $1,100 or around 1%. Now, one of the big reasons that monthly performance was so high was because of kind of a singular event that affected one of my stocks, Crowdstrike, but I'll talk about that a little bit more when I dive into the individual companies in my portfolio. So going back to the 1 year view, it looks like my portfolio was just on a continuous increase from March until now. But the truth is, a big part of that growth was driven by individual companies reporting exceptional earnings and then continuing to beat expectations on Wall Street. This is how my portfolio has grown so much, by investing in really strong individual companies that are creating value for people. So what were those individual companies? Well, let's look at them now. So if I scroll down, these are the 6 companies that I have money actively invested in. Those companies include Alteryx, Cloudflare, Crowdstrike, Datadog, Okta, and Zoom. So kind of going through these one at a time, my smallest stock position is Alteryx, where I only own 9 shares, or a total value of just over $1,000. Now, if you've seen my previous stock portfolio reviews, you'll know that Alteryx is barely even a position for me. I made a video on this company several months ago where I talked about how Alteryx was facing some headwinds due to the number of companies cutting back on their spending during the pandemic. Because of the way Alteryx does their accounting, when they add new customers, it looks more impressive than it actually is, and when they cut customers, it looks even more drastic than it actually is also. This has resulted in some short-term headwinds for Alteryx, and I do think that once companies spending picks up, Alteryx is going to increase in the future. And so because of that, I just kept a very small position in Alteryx just to keep it on my radar, but I don't really consider this money invested with the intention of it growing in the short term. You can see that overall for this company, my gain and loss is essentially $0. So the next company we can look at is Cloudflare, which is one of my largest positions. Cloudflare is now a $27,000 position, which puts it at my 3rd largest position in my portfolio. Cloudflare is a company that provides services to make the internet better. This includes CDNs to host websites, security to protect websites from attackers, as well as edge computing to allow people to move their computing power to the cloud. I still have a lot of confidence in Cloudflare as well as its management team, and the fact that they continue to churn out new and improved products every couple months really gives me a lot of hope for this company's future. You can see that I have made over $8,000 in this stock just in the past couple months. So the next company that we need to look at is Crowdstrike. Crowdstrike is actually my new largest stock position in my portfolio, which is a huge change from last month. Now, Crowdstrike has always been a pretty large position in my portfolio for me just because I believe in what they're doing. They're providing security services on an entirely cloud-native infrastructure. This means that they have a huge advantage for any company which is building applications for the cloud because their software runs natively in that environment. As much as legacy companies might try to move into this same area, they're always going to be a little bit behind companies like Crowdstrike, which don't have that legacy software to deal with, and everything is built natively for the cloud. Now, Crowdstrike in this past month had kind of a singular event which propelled its stock price a lot farther than I would have expected in this short of a time. There was a huge security breach of a company called SolarWinds, and that breach allowed attackers to infiltrate systems in the Treasury Department as well as several other government agencies, as well as exposing over 18,000 other agencies and companies that use SolarWinds software. After this breach, SolarWinds decided to deploy Crowdstrike's Falcon endpoint protection, giving them some great publicity and really demonstrating that Crowdstrike does have some best-in-class software. Because of that, Crowdstrike's stock price shot up over the past month, resulting in it now being up over $32,000 for me from a base of just over $11,000, meaning that the stock has almost tripled from where I first bought it. Even though this price has gone up a ton recently, I think that Crowdstrike still has a ton of room to grow, and so I'm very comfortable leaving it as my largest stock position for now. The next position to look at is Datadog. Datadog is my second largest stock position at almost $38,000 invested. Now, both Cloudflare and Datadog were in my previous video talking about the top 3 stocks to invest in for 2021. What Datadog does is allow companies to extract insights from their data that is normally siloed between different departments. They let you view your applications, your infrastructure, and your security all through a single pane of glass and to gain insights from that data in one place. Datadog has performed really well this year with the number of companies moving their infrastructure over to the cloud. And I think as companies continue to generate data and realize that that data has a huge amount of value for them, Datadog is going to continue to perform really well over the next several years. Because of that, Datadog is my second largest stock position. And you can see that over the past year, Datadog has made me over $15,000 off of a base of just over $22,000, making it, again, one of my better performing stock positions this year. So the next company on the list is Okta. Okta provides identity access management. Think single sign-on for corporations. Like pretty much all of these other companies, Okta has benefited hugely from the number of companies moving to the cloud and requiring IAM access and controls between applications that might not directly interact with each other. Now, Okta is actually my second smallest position at just over $12,000, but it has actually performed really well over the past year, increasing almost $6,000 off of a base of around the same number. Again, I am pretty happy with Okta as a company. I think they're going to continue to perform pretty well, and so if anything, I may increase this position a little bit in the future, but I don't think I'm going to sell out of it anytime soon. Now, the last position that we need to talk about is Zoom, which might be the company that I've talked about the most on this channel. Zoom, if you haven't heard of it, provided the video platform that kind of defined 2020. Trying to catch up with old friends, jump on a Zoom call. Trying to collaborate with employees at work, jump on a Zoom call. Zoom was the go-to solution for connecting with people when you couldn't interact with them face-to-face. Because of this, Zoom experienced really once-in-a-lifetime growth for a couple quarters in 2020 when it seemed like everybody in the world was jumping on their platform all at the same time. Zoom handled this increased traffic really well without really decreasing the quality of their platform while supporting a huge number of new users. The stock market rewarded Zoom by increasing its valuation by over 300% in 1 year. The problem was this valuation might have gotten a little bit ahead of where Zoom's software was because it priced in a huge amount of growth for Zoom's future. At the end of 2020, it became clear that Zoom isn't going to be able to continually add the same number of customers that it has in the past simply because they're kind of already saturating their market. This means that going forward, Zoom is either going to need to expand into international markets or release new products in the US. Now, while I think they are absolutely capable of doing this and I have a lot of faith in their CEO, Eric Yuan, these are both risks that could face Zoom in the future. Because of that, I decreased Zoom from my largest stock position to now my fourth largest stock position at just over $20,000 invested. Despite that, Zoom has still performed really well and it's essentially doubled the money that I've invested in over the past year. Now, the money that I sold out of Zoom in the past month, I mostly deployed between Cloudflare and Datadog. Now, if you've been watching my stock portfolio videos for a while, you'll know that I did not own Zoom for over 1 year when I sold it. This means that if I own the stock in a non-tax protected account, I'm going to owe short-term capital gains taxes on Zoom, which is essentially taxed at the same rate as my income. If I could have held on to those Zoom shares for 1 full year from when I first bought them, I could have paid a long-term capital gains tax rate, which is a lot lower than the tax rate on my income. The reason that I decided not to do this is because I think that the opportunity cost of not being invested in great companies like Cloudflare and Datadog is higher than the tax penalty from selling these stocks early. Because of that, in general, when I'm investing in the stock market, tax considerations are one of the lower considerations on my list behind the actual companies that I want to invest in. Now, that might be controversial because I know a lot of people really try to optimize their tax savings when investing. I just found that that hasn't worked well for me, and in the past, when I try to save $1 in taxes, I end up losing $10 in potential investment gains. Now, kind of along those lines, all of the stocks that I have here, you can see that Cloudflare, Crowdstrike, and Datadog have a 2 next to them. This is because Charles Schwab is actually adding up the total shares that I have in 2 different brokerage accounts. The first is my Charles Schwab account, which is a taxable account, but the second is my Vanguard Roth IRA account. Now, a Roth IRA is a tax-advantaged account. You can essentially contribute $6,000 every year to your Roth IRA, and that money will grow absolutely tax-free forever, and when you pull the money out at retirement age, you again won't have to pay taxes on it. This can provide huge advantages to you because you don't have to worry about things like short-term or long-term capital gains, and you can just focus on investing your money. Okay, so the last thing that I promised I would go over was to talk about if I made any trades in or out of this account in the past month. So let's look at those now. So in December, I made 2 sales of Zoom. First, I sold 11 shares at $390, and then 4 days later, I sold 12 more shares at $391. This was part of me reducing the size of my Zoom position in response to some of those risks that I talked about earlier. And I made an entire video talking about why I sold some of those Zoom shares if you're interested in hearing more information about that. Additionally, I made 2 more trades on December 21st. I bought 55 shares of Cloudflare at around $84 a share, and then I bought 44 shares of Datadog at just under $104 a share at around $4,500 adding into each of those companies. I did this because I think both Cloudflare and Datadog have a lot of potential to grow in the future, and they were already smaller positions than my largest position in Crowdstrike, so I wanted to balance out the positions a little bit more. Now, in January of 2021, Zoom is going to be a position that I continue to monitor pretty closely. If any of the risks that are facing the company end up panning out, I may reduce my position even more, or if it turns out that those risks are overblown, there's a chance that I'll buy back into Zoom. Either way, I'm going to be watching it fairly carefully over the next month. So to summarize, 2020 has been an absolutely crazy year in the stock market, with my portfolio up over 300% in just 1 year. Now, I absolutely do not think that I'm going to repeat this performance in the future. This is a once-in-a-lifetime kind of year of stock performance, and it's very unlikely that we're going to see the same thing next year. That being said, I'm not going to sell out of the stock market because I feel like it's at a peak. I'm going to stay invested in companies which are creating value for people and which are selling products that people love and enjoy. Will those companies go down? Yes, at some point in the future, those companies are going to drop. But I think that in the long term, these companies have the potential to continue to outperform the stock market. Additionally, in 2021, I'm going to continue to look for companies which can outperform the market just like these have in the past year. If you're curious at all on how I go about looking at those kind of companies, I made a previous video talking about how to start investing for beginners, which kind of lays out my mindset for investing. Now, since we're looking at charts here with the stock market going up, there's one more chart that I want to show you. So in addition to this being the best performing year that I've ever had in the stock market, in this year I also started a YouTube channel. And over the past around 6 months that I've been running this channel, we've seen a ton of growth. You can see from this chart, just back in August of 2020, I was only talking to 64 subscribers, and now at the beginning of 2021, I'm talking to over 1,970 subscribers. So thank you all for watching my videos in 2020, and I have some really exciting ideas for videos for 2021. So stay tuned. With that said, I hope you enjoyed this video. If you did, make sure to leave a like. And if you don't want to miss out on any future videos, make sure to both subscribe and hit the notification bell. I'll see you next time.